Well, Jianpu is now the fifth Chinese financial tech company to go public in New York this year, having debuted just last month. Lightspeed China Partners' James Mi was an early investor in the online financial products platform. He was also one of Google's first employees in China. Bloomberg Tech's Selina Wang spoke with Mi from Shanghai and started by asking about this trend of Chinese fintech companies listing abroad.
The consensus is the fintech market in China, it will be bigger than even in the fintech market in the U.S. And so you will see the first batch of the companies going IPO in New York Stock Exchange and in the U.S. But also there are other companies are being listed in Hong Kong. These are very substantial market cap companies. And you will see potentially even more next year.
But James, how concerned should investors be about the regulatory risk? One example is Qijian, a microlender that just listed a few months ago, but its shares are already plunging since the Chinese government said it would tighten regulations in the lending space.
Certainly. I think the government is really coming out with more regulation, and particularly for lending business through internet. There's just in the past week or two, and there's clear regulations on the total interest and the fee cost, and there's guidelines in terms of what's the appropriate numbers and it should be used. And I think that as the regulation usually catches up with the internet companies, and that happens in the online payment space and the online video space. And usually the company grow and the government try to learn and come up with regulations or licenses afterwards. And so that will help to further clarify the regulation, and I think there will eventually be a positive news for all the players in the space, and to have a clear regulation to stick with. And so this is certainly some uncertainties that's reflected in the volatility in the stock, and so that's something that the investor should also pay attention to.
Prior to joining Lightspeed, you had led Google's very early efforts in China more than 10 years ago. Bloomberg is now reporting that Google is trying to get back into the country, but this time with its artificial intelligence software. So what do you make of that strategy?
Yes, I think Google really recognized China internet market is really the biggest single country market in the world, and Google is definitely want to engage and serve the users in China. But I think there's certainly regulatory efforts need to be made, and I think Google is learning to develop a more sophisticated approach to engage with the government and to address the regulatory requirement. And I think as the internet technology world is developing from pure web internet to mobile internet, now more towards artificial intelligence based services. So Google really has an advantage in that. So they developed the AlphaGo, which really has a very publicized competition between AlphaGo and the top Go player in China. And they also offer the real-time translation service between the Chinese and English, and offered through a mobile app that's specifically developed for China. So there are a lot of efforts to try to really engage the users. But I think there's still more work could be done by Google because the market is just too big to really ignore, and I think they fully realize that.